Hey YouTube, it's Wes. Look who's back in the studio. Isn't that awesome? I have been wrapped up in all kinds of business travel lately, and here I am. And I know the question you're thinking, why am I recording this so low? Well, I'll tell you. Cue the dramatic music. Wah, merch, baby. Oh yeah, look at that. Dude, we have some awesome merch on the channel here. Guys, I can't wait to show it to you. I've already had a few people buy it. It's on the YouTube channel if you want it. If you don't want it, that's totally fine. That's totally fine. But this is like some sweet, awesome merch. I've got more coming out all around my name and all around this channel. So I'd love for you to check that out if it's right for you. Okay, in today's video, which is right before Thanksgiving, just want to say happy Thanksgiving to all you amazing people out there as we are getting closer to 100,000 subs. Guys, thank you so much. I'm not a full-time YouTuber, so to be able to do this when I have time and for you guys to hit that subscribe button like you do really means a lot. I'm not a moon pumper, not a full-time YouTuber. I am a startup entrepreneur, and I love covering crypto and a whole bunch of other stuff on this channel. So today's video, we're going to jump into a few hot news items and sort of a roundup, some big stuff that you don't want to miss. I'm going to reinterpret a lot of it and why it's such a big deal in today's news roundup. We're going to cover what's happening in India and how that affects us here in the US. We're going to cover what the heck is going on with all these metaverse cryptos and why they're still blowing up in this rough market. And then we're going to dive into just a bit more all around the information and all the data coming out around the regulatory world in the US and how that's going to affect you, especially with stablecoins. All that and a whole bunch more coming right up. All right, friends, I've already done the intro. I just sort of stumbled into it, so we're just going to jump right into the news. But I will say, if you're interested in the shirts and you're on mobile, go check out the store page. You have to click into my channel on the mobile app, on the YouTube app to be able to see it, but you should be able to get to it really easy. Thanks for hitting like and subscribe. Please share this video out with all your friends. All that stuff goes a really long way. Okay, so let's just jump right into the news, shall we? So we've seen this happen yesterday. There's been a lot of rumors over the past year in India of impending shutdowns of crypto and blocking. We know this has already happened in China to a large degree with mining. We've seen a huge outsourcing of Chinese miners going to the US, going to Canada, going to some other countries. That definitely shifted the market and definitely tanked it for a while. We recovered out of it, and we're seeing some of the same things in the crypto market right now, especially with what's happening in India. And I have a big problem with this. And I'm going to talk about what a huge mistake that the Indian government is making with all of this because of the power of India as a technical hub. It's a really big deal. So here's one of the news articles I want to cover. So Indian entrepreneurs are returning from Silicon Valley to invest in Bengaluru. Forgive me for butchering that name, right? But I'm showing this article. This is not that old. It comes from July. And the reason I'm showing this is if you guys don't know much about me, I'm a startup guy, right? I built and sold a company just recently. I love startups. I love that whole world of, creating something from nothing and building and financing rounds and growing a company into an exit. And I think it's a lot of fun. And India is a huge hub for this. And why is that important for today's video? I'll tell you this right here. So if India is a growing hub for innovation, what's one of the most important innovative technologies in the world today? Blockchain. So they go hand in hand. And if I'm speaking in front of Indian Parliament, this is what I'm saying. Guys, you have to separate crypto from the technology, from crypto from the financial pieces of it that you feel threatened by. And so you doing a hard and fast shutdown of all of this is a really risky move. And I realize that we're waiting to see what fully comes out of some of the debate that's happening in India. And there will be some crypto that's allowed, especially their own government-backed stablecoin. But my point in showing all of this is look, if we have $200 billion moving into India, especially in Bengaluru, it's a big mistake for us to literally slice a whole bunch of that out and say, nope, not going to happen in India on the crypto side, right? And so I want to just show you more information on why this is such a bad idea. So McKinsey is a research firm, and they're showing the IT industry alone is going to touch $300 to $350 billion in India. That's the amount of investment money that's coming in, market capital growth, all this kind of stuff in the Indian sector. So you're going to shut this down? Again, we're not saying, and I'm not saying that all of this right here, in fact, none of this is all IT, but I'm just showing India is a hot hub for growth. And so shutting down crypto inside of it is a colossal, colossal mistake. take a look at this. When we look just across the world, like this is another thing that I would share with the Indian government. Look at this. So blockchain startups raised $4.4 billion in the second quarter this year alone. $4 billion in one quarter just in crypto. Like, and it's going to continue to grow. We're going to see this go from 4 billion a quarter to 10 billion a quarter, and we're going to continue to see this grow. Why do I know that? Because we're seeing huge venture capital arms and private equity coming into crypto like crazy. In this video, really in this channel, I've covered Coinbase Ventures, for example. So Coinbase themselves has an entire venture arm in which they're hunting for innovative cryptos to invest in and help them grow, and of course make some money on their own. And so we know this is a big deal. And so again, just coming back to this showing, okay, so we know money is coming in. This is not India, right? This is just across the world, 4.4 billion just in this quarter. So, if we extrapolate all that, you're looking at a 2021 investment growth in blockchain across the world at probably $15 billion just in investment growth. And so India coming in and saying, no, we're going to slice all of that out and take out ourselves from that competition is a huge mistake. It'd be different if it were some country that's never really been known for software and IT and, security startups and all this kind of stuff. It'd be totally different. But this is India we're talking about. And so their fear of what's happening at the parliamentary level of, hey, this is a threat to our economy, so let's just kill out all of it. We have a saying here in the States, it's like throwing the baby out with the bathwater. This is such a mistake for them. And we can see this, take a look at ZDNet, right? So I wanted to show this as well. So this is some study data that's coming across showing which countries are the largest in terms of crypto growth and investment. Of course, the US is carrying this right now. We'll see how long that happens, right? And I will say regulators in the US are aware of this, and they'll tell you we want to continue to steer in the regulatory cycles where crypto is going, but not completely stifle innovation. And so we're at the top at US, but look at this, India is on the list. So they're probably going to drop out of this list and others very quickly if this legislation goes through. And so why am I sharing all this? I'm sharing because a couple things. One, this negative news is definitely impacting the market, right? It's definitely causing some fear that's in there. But secondly, I think equally important, we can learn a lot from what's happening in India. I think they're making a huge mistake, as I've said this over and over and over, and let's not see other countries that are on that list make the same mistake. The idea should be, how can we adequately regulate this without killing the innovation, without completely running this out of our country? That should be the idea in mind. And so my advice to our federal regulators here in the States is, let's not do what India's doing. Let's celebrate the innovation, let's celebrate its growth, and let's understand, if we're going to regulate it, how can we steer that in ways that's not going to completely tank that market? So I think it's a big deal. Okay, so let's talk about the second news article. So this came across my inbox recently. Sandbox token, let me go and bring this back over for us. Sandbox token rallies 260% in November. Whoa, what's going on here? So first of all, I'm like, what the heck is Sandbox? And then I saw this metaverse, and I'm like, oh, this must be like a Facebook metaverse token of some kind. And then I realized, we've got some marketing that's going on here. One of the big challenges that we see across the board, I see this in cybersecurity where I'm in, I also see this pretty heavily in crypto, is sometimes marketing drives terms and buzzwords way further than the technology is going, and it causes a lot of market confusion. And this is an exact example of this. So when you see all these cryptos that are coming out about metaverse, what they're meaning by this is not like Facebook metaverse cryptos, that Facebook is trying to coin that term. We know they changed their overall corporate name from Facebook to Meta. This is not this. It's a class of cryptos that are driving some kind of game. And this whole world is not new. We've seen old school games in the early 90s come out around this, like Second Life is an example of this. I remember Second Life for a while was really, really hot. And so I want to give you a little commentary on what I think is going on with a lot of these tokens, where the growth is coming from, and at least for me personally, why I have a lot of concern around all of this and why I'd definitely be worried. And sorry if this video today is all negative. There's a lot of negative news coming on. So I'm trying to interpret all of this for you, right? So you might say, well, 260% growth is not negative. If you're somebody that invested in sand before that happened, congrats, you saw something new, which was great. But there's some negative in this, in the sense that this is not sustainable. And I'll show you why it's not going to be sustainable towards the end of this little commentary, right? But we see that sand is blowing up. We see that sand is is powering this game that's owned by Animoca Brands. I don't really know a lot about the game, but I'm going to show you some information around it. But we know it's growing, we know it's blowing up. And so the question is why? Why is it blowing up? Why are we seeing the price continue to grow, grow, grow? You can see this right here on CoinMarketCap. We see here, let's just do like a 1 year. Look at this blow up right towards the end, right? So we see that this is really growing high. And again, I think a lot of it is marketing driven. You're seeing some new technology enter the market around like a game economy that's driven on crypto. And I think that's interesting, right? If you want to see the sandbox game, here it is. It's like a modern version of Second Life, right? If you never saw Second Life, it's just this virtual world. And there's a lot of these kind of games that are spinning up. You see like essences of this, of what kids play in Roblox. It's this sort of like almost a Minecraft retro look to it. I mean, the game looks really awesome for sure. And I'm sure it's great. But the question is this game alone worthy of driving up the entire sandbox crypto from that drives the whole thing up to $7.54? Is it worth hitting? Does it reflect a total market cap of, where is the market cap for here? There we go. A $6.9 billion market cap? Like, really? Is the game worth $6.9 billion? Are there that many users that are in there to build this franchise up to that? And then even a fully diluted market cap of 23 billion, if we were to assume all supply were to be generated now? My answer is no. Like I have no idea how many users are playing in Sandbox right now. The game is literally an alpha. Literally an alpha. So there can't be enough users. Like if we were to say there's 10,000 users and then divide that by the number of like the market cap, I mean, you're talking about many thousands, maybe even hundreds of thousands of dollars per user. The market cap doesn't support this. It simply doesn't. So what does that mean? That means this is driven on hype. That's not necessarily a bad thing. We've seen over time some hyped cryptos do really well. Take a look at Shiba Inu. Take a look at what's happening in Doge. But it's a warning sign to any investor to say, look, that like the market cap doesn't support such a brand new burgeoning game. I don't know how long that price can stand up. Now, I don't do price speculation on this channel. I'm just giving you from a technical person's point of view, that someone like not technical analysis, but just like I understand the startup world, the marketplaces here. Like this is definitely something that I don't think is sustainable, but it's not just sand. Like there are other ones that are blowing up too. So take a look at this one, Decentraland. We've known this one for a while. It's been out for, I don't know, at least a year or so. Mana is the name of it. It's at 527 right now. Same thing. You look at like look at this. I mean, you can just see it on the 3 month. You just shot up from 79 cents to bam, immediately up at 3.39, and it's even higher. Again, hype is driving a lot of this. And if you want to see Decentraland, it's very similar to what I just showed you as sand. What's happening in that whole game, the sandbox, I guess is what it's called. It's a little bit more cartoony. It's a little bit more like Sims is kind of what this looks like. I mean, it's super cool. If this game is for you, then good for you. Like play it, enjoy it, have fun. But I have to ask the same thing. Is it worth a market cap of $9 billion fully diluted at 11? I don't think it's there. Like, I don't think the numbers, again, support this. So I think that should show us there's some scariness that's driving this in the sense of like, again, a lot of hype is growing into this. If we see the user accounts just blow up and we get into Roblox level numbers or like, Minecraft level numbers, okay, maybe it's there, right? Maybe there's some early adopters that really understand it. But to me, that's really pretty scary stuff. So let's go take a look at this again. I've got this for you, and I'll put a link for you in the description. I'll put a link for you if you want to take a look at all of these like metaverse kind of coins that are out here. Here's a whole list of some of the top ones. We can see this Mana itself is sitting at number 23, so it's pretty high. And of course, Sandbox is just rocket shipped up into the number 31 crypto overall. So here's a whole list of them. This is probably not like the complete list, but if you want to take a look at some of these and just see ones that are out there, if you're interested in investing in the space, there you go. You can certainly do all of that if you should wish. Keep in mind when we say like when we talk about these metaverse cryptos, keep in mind we're not talking about Facebook metaverse. I think a lot of the Facebook metaverse and meta news of like them building their own virtual world over the next few years is driving this. Again, it's a lot of the hype cycle that's happening. I tend to think buying into the top of a hype cycle, which we may be at right now, is a risky thing to do. But if you believe that it's going to continue to grow from there, then maybe that whole asset class of these like metaverse style virtual world tokens is for you. I can just tell you, for me, it's not what I'm getting into, right? It doesn't fit my investor profile and I don't like where it's going. But do your own financial advice, right? Like the last thing you want to do is listen to a YouTuber. Don't listen to people like me. If you do, you're going to go broke. I'm not your financial advisor. I never will be. So make your own educated decisions based on your own due diligence and your own consulting with your own financial advisors, right? Like I can't say that enough. Don't listen to YouTubers. I say this all the time, but I think it's important. Okay, so that is the second piece of news item that I wanted to cover. And lastly, the third is a little bit about what's happening on the regulatory news cycles in crypto in the US. So first of all, eToro, which I think is based out of Israel, is delisting Cardano, and immediately Cardano jumped in, and Hodgkinson jumped in, the founder of Cardano. So we're not being delisted, and he's technically right? Like they're not delisting this for everybody; they're just delisting it for U.S. customers. So he's kind of right, kind of wrong, right? It's definitely some marketing speak from him. But this it asks the question, it begs the question: what's happening with eToro that's causing them to pull back on Cardano and not offer it in the U.S.? It could be regulatory pressure. It could be fear of regulatory pressure and fines that are coming, and it could just be their own uncertainty of what constitutes where the regulatory direction is going and how Cardano could be caught up in the middle of this. And it's not just Cardano, they also are delisting Tron for US customers as well. So this is going to happen on December 26th, the day after Christmas. And we'll see why this is happening. I don't have enough information and news around all this other than to say something caused eToro to say we're going to pull back out of this as a Israeli-based exchange that's offering crypto in the US, and we do have to adhere to crypto guidelines in the States. They're pulling back on some of that. And let's talk about some of the latest news. You guys know I've been covering this for a long time. I've had multiple videos on why and what is happening in the regulatory cycle around crypto. And if you don't know, I'm an old banker, right? So I used to work at a bank and I was an IT executive at a bank. And so I understand this world. I understand how regulators move. Regulators move very slowly, but once the ball is rolling, like there's a lot of inertia that happens. And one of the things that regulators have decided, especially in FTC, CFTC, and SEC on the regulatory side in the US, they've decided that they're putting their eye onto stablecoins. And I understand why, right? Stablecoins are intermediary between cash fiat and the crypto world itself. You can kind of move in and out of that. They're paying high gains. SEC Chair Gensler has said multiple times things like, hey, look, stablecoins are like poker chips. They're that risky to them. And so they're definitely putting their eyes on this and saying, how can we regulate stablecoins and make sure that, all of this is controlled in a way that's, controlling risk for investors. Now, there's a lot of opinions that can come out of that, which I don't really usually get to on this channel, like what I think about all of that. I think there's good and bad. I think there's both sides have some important things that they could say in this debate. But here's where they're starting. Look at this. U.S. senators are demanding answers from some of the stablecoin holders. It's not just Tether, but Tether's one that's really drawing the ire of regulators. And if you look at a lot of news, and I've covered this in other videos, there's always been speculation that is Tether really a one-to-one? Like the idea of a stablecoin is somehow it has to be pegged to, a fiat like the U.S. dollar. And Tether for the longest time had said things like, oh yeah, it's definitely it's cash reserves. And then we look into it a little bit more and we're like, well, no, it's not quite cash reserves. It definitely is some cash reserves, but there are other assets that are tying it up in its value too. And that's where it gets dangerous, right? Because, let's say that it's cash plus it's, some kind of like, securities investments that they've made, and all these things together constitute a pool of capital that is used to peg the stable coin. Well, what happens if there's fluctuation in some of those other asset capital holdings that they have that could cause it to go up or down? And that's one of the things that's causing U.S. regulators to really dive into Tether, is really, truly, what is the background on what your reserves are and how you're actually storing it and showing it. And so the U.S. Senate is going to force them into showing and proving that there is actual cash reserves stored and held, and it's a one-to-one. We can see right here, 69 billion tethers in circulation. So that means they should be holding 69 billion in US currency. And I'm just telling you, they're probably not. Like, it's just staggering to think about that. And so, of course, I think even those that are like anti-crypto regulation are going to have to, at least to some degree, agree and say, yeah, this whole like pegging to the US dollar is super sketchy at worst, and at best, certainly something that we should have a lot of concern about. And so Here are the 6 questions, and we don't have time to dive into all of these, but I'll put a link in this in the description so you can go see it and you can read up on all of this. But, regulators are really diving into this. They want to know the process on how this is working, how it's minted, how we create additional ones, all of this stuff that I wish I had time to dive into. And so this is definitely scary. Like if I am Tether, I'm thinking, like they should have known that this is coming, right? Secondly, though, is not just should they know it's coming, they should have answers and ideas behind all of this and how to handle this from the regulatory side. We've seen this coming for months, so they should be prepared for this. But it could go very poorly for Tether, and there could even be a snowball effect for all things DeFi, which DeFi, of course, with stablecoins is a huge driver for all of this. And personally, I worry. Right? Like I worry about what's going to happen in the entire market as a whole if we see this go really south and a lot of fines get thrown on, and maybe even like Tether has, like United States action taken from regulators on its use. Like we could see some extreme things happen. And I'm not trying to spread FUD. I'm just trying to say we should be prepared for these eventualities. And so this could certainly harm and affect the DeFi market. We know that regulators are very focused on stablecoins and DeFi. I think there are some in the regulations, like forms of government that are out there that if they could shut down DeFi completely, they probably would. There are other regulators that are like, no, we want it to flourish and innovate. We just want to control it a little bit. So this is it's an unknown time. That's the best way to say it. It's an unknown time in the regulation cycles in the US federal government around stablecoins, but we need to be prepared for this. This all comes back to the very number one rule of crypto: never invest more than you're willing to lose. So what's going to happen if regulators come in and at worst shut down almost all DeFi, or at least try to? How are we going to handle that? You should think about that. I don't think that's going to happen. But we should game plan that so that any other eventuality it's not as bad, we're going to be prepared for. So we'll see what happens to the market. We'll see what happens to Tether. We'll see what happens to all these DeFi platforms that are out there and some amazing things like Celsius and BlockFi and many others. We'll see what happens to all of it. My personal opinion is we don't need to panic. It's not all going to just shut down. But I do think we need to be ready for how it could impact the market in the short term. And hopefully a lot of these innovators are going to find some ways to work with regulators and find some common, neutral middle ground that works for everybody, especially people like you and me. There you go. It's my news roundup. I hope you guys have an awesome Thanksgiving. If you're in the States, eat a lot of turkey for me. Definitely check out these sweet shirts. If these are right for you, you should definitely check them out. I hope you guys like this video. Definitely like and subscribe. Share it with friends if it helps as well. Share it on social, any of that good stuff as well. All right, my friends, thank you guys so much.